What's going on, everyone? What we cover today is something that all investors must be aware of heading into the rest of this year. Trump has officially called for the largest rate cut in history, and as we know from the historic money printing days of 2020, this will have a big impact not only on the stock market, but also housing, Bitcoin, and even the price of groceries, and quite literally everything else. Stick with us today. You are not going to want to miss this.
100%, Mike. It's a pretty crazy situation whenever you have the President of the United States calling for rate cuts like we're about to get into. And I will say the SPY actually held up extremely well today. We can see right at open, the SPY jumped back up to 624.50, ended up selling back off throughout the middle of the day, but around market close, made a pretty good recovery to come up and test resistance once again. So the SPY is trying to make this recovery here. Posted that new all-time high on Thursday of last week, hitting up around 626. It'll be interesting to see if it can get there tomorrow. But Mike, like you alluded to, Trump called for a crazy rate cut here in the short term. The rate cut he's calling for is to be 3 interest rate points. This is pretty insane. He says it's costing the U.S. $360 billion a year per point. I thought that was a pretty big stat there. Of course, obviously, if they could cut by 3 points, that'd be saving like $1 trillion a year. So it sounds pretty good. Nonetheless, I'm not sure that a lot of economists would agree there. But nonetheless, Mike, this is a pretty interesting thing whenever you have Trump saying this. And as we know, Trump has been hitting at Powell a lot in the short term, calling him too late Jerome, and pretty much calling for him to lower the rate. And it looks like that pressure is continuing. And, like we showed on the first article here, there is like a shadow chair potentially being considered being named, which I thought was pretty crazy as well.
Tom, we have so much to unpack here. So starting off, like you said, he's calling for this massive interest rate cut. And to put this into perspective, the largest interest rate cut the United States has ever seen happened in 2020, when the world was shut down and the economy was basically in a recession. This cut would be 3 times larger than the previous largest cut in history, and we're not even technically in a recession right now. So that's the first thing. The second thing is, as we know, there is one thing that Trump wants more than anything else right now, and that is to lower the rate. Just like he's saying at the end of his Truth Social post here, he has been on Jerome Powell nonstop about this, and basically Trump is about to appoint the next Fed chair soon, because Jerome Powell's term as the chair of the Federal Reserve board, I should say, expires in May of 2026. So basically, Trump is about to bring in his own guy here, and this guy's going to have a giant influence on interest rates. And as we know, what happened last time when Trump turned on the money printers in 2020, yes, asset prices boomed, but that also has a giant impact on the affordability crisis and quite literally the price of everything. Like we saw in 2020, the stock market skyrocketed, crypto skyrocketed, all assets skyrocketed. And if we see a mega rate cut, like what is being discussed here, we might see mortgage rates fall from 7% down to 4% and see housing prices skyrocket. But as we know right now, that isn't necessarily a great thing or what's wanted. As we can see from this data here, essentially the yellow line represents how much money people need to make to afford a house. And we could see in the blue line is what people are actually making. Needless to say, there's a giant affordability crisis in the country right now. And as we know, the price of quite literally everything is very high in multiple different ways. So basically, while a mega size rate cut, like Trump is saying, would certainly serve as like short-term jet fuel for the economy, there's no such thing as free money, as we all know. And our root problem is that the country just spends too much, and that problem isn't going to be, resolved just by pumping more money into the system. This is important because depending on the path of rate cuts going forward, is going to have an enormous impact of course, on the stock market, but quite literally everything else. And again, Trump's new guy is going to be appointed very soon. Like Tom alluded to, there's what's essentially happening right now is Trump is setting this up to be like the shadow Fed chair, where technically his new guy isn't going to come into the the role of the chair of the Federal Reserve until May of 2026. But if Trump announces him early, which he said he's going to do, and he said he's going to do it soon as well, then the markets are going to look at this new guy because he's going to be the one next in line for this position, and they are going to respect what he says because he's quite literally next in line for this leadership role. Now, the good news is that this new guy, whoever it is that Trump chooses, can't solely pick the interest rate for the economy. That has to be voted on by all of the decision makers at the Federal Reserve, and it has to be a majority vote. So that's good at least, but wow, Tom, this 2025 is only getting crazier and crazier.
It really is, Mike. And, whenever I'm looking at, let's say, the affordability crisis here, and we start to look at this huge gap on this chart, where did we also see a huge affordability gap? It was kind of like the early 2000s heading into what we call the financial crisis of 2008. So definitely not good, like whenever we start to see this start to have such a huge gap. But it also means the consumers feel it out there, right? Like the housing affordability is obviously down, and we can get a lot deeper into this and even talk about like grocery prices. Obviously right now inflation is not at like a crazy number, right? It's down around 3%. It's not like it's going crazy. It's not like it's necessarily at the Fed's goal of 2% either, but the market has been holding up fine in this current situation. Like if we go to SPY, we look at the daily chart, things have been holding up pretty well. One thing that I am pretty happy about here, I guess I would say, with the Federal Reserve is that they haven't started tightening too early. If they do tighten too early, and let's say that we start to get into a crazy situation, kind of like what we saw during COVID, where stocks started crashing again and we started getting like that V-shaped formation back down, they at least now they do have some room to ease. So I think that Powell is being kind of smart here by kind of sitting on the sidelines, but nonetheless, Trump's pressure could end up playing a big role, and I cannot wait to see who the shadow Fed chair might end up being if he does announce that. Let me know in the comments some names that you guys think it could be.
What a time to be alive. But like talking a little bit more about this, like if we do see a mega rate cut, whether it is, 3 points lower or 2 points lower or maybe 1 point lower, that would be good for asset prices. It's basically just stimulating the economy, just like we saw in 2020. But like we also saw in 2020, Tom, if you can go to the affordability housing chart, that would be great. We could see also in 2020, while asset prices boomed, it hurt a lot of people because, it just it makes things more unaffordable, especially for those who are, not in the position to afford those assets to begin with. So yeah, it's very interesting, and it is going to have a big influence going forward. And like you said, Tom, the market is doing pretty fine off this news. And I saw some interesting data today that basically shows that, yes, while retail has been buying the dip and they have been making a lot of money from it, we're still seeing the so-called smart money, like institutional clients and hedge funds, selling.
It really makes me scratch my head here. Like, what is going on? We have the institutions out here selling with the hedge funds, and retail traders are out here buying up the market. I found that to be extremely interesting, just considering that, the overall market has been on such a massive run. I would have thought that maybe, institutions and hedge funds would be buying it up a little bit more, but this could show that maybe there is some worry there. And I'm not surprised that they would think that. There is a lot pointing to maybe some worry in the short term, especially with tariffs and everything like that. We didn't want to bore you guys too much with the tariffs today. I know that tariffs have definitely been in the headlines pretty much every single day recently, and I'm sure we'll be hearing a lot about those going forward again, but those are really, I think, what people are worried about, Mike. They're worried about tariffs potentially putting strain on inflation, and if that happens, obviously the economy would be in a pretty bad point if jobs started to deteriorate as well. But this all kind of goes hand in hand, and, just looking at the the data here, I will say retail traders have kind of been powering this move higher, it seems like, in the stock market, but I just don't want traders out there to get kind of caught with their pants down, right? Because the SPY is a little bit overextended, and just be a little wary when the tide changes. Just be aware that sell-offs can happen, and it can create some good buying opportunities. Even during some of these small pullbacks in 2024, there were great opportunities coming from those.
Hell yeah. And I'm very happy to see retail, leading the way because, the so-called smart money has been pretty wrong for the past few months. So, while it's great to see, I also think that this type of information should be used to retail traders' advantage in the sense where, yes, we know that the so-called smart money has been wrong, but also at the same time, they're probably not, sitting on the sidelines for no reason. So, just like Tom said, stay adaptable. If we do see a pullback, know what you're going to do ahead of time. You could either sell out and wait for a better buying opportunity. You can protect yourself or just have a super long-term mindset and, weather the storm either way. But either way, it's smart to have a plan so you can make good decisions. So good stuff there. But Tom, while we have all of this craziness going on in a broader sense, Nvidia did it today. They broke $4 trillion in market cap, and this company has just been in rocket mode. They reached the $1 trillion mark in 2023, and then from there, it's just been off to the races. They broke the $2 trillion and $3 trillion market cap level last year, and it is in boom mode.
Yeah, I think that the market's really showing where the money likes to flow, at least over the past couple years, right? What really has been booming Nvidia, it's been AI, and they are like the kings of AI with their chips, obviously, that power so many different AI capabilities. Obviously, Nvidia has been one of the better stocks to own over the past few years, and whenever we look at them, Mike, they had a pretty rough, I would say, end to 2024 and even beginning of 2025. I know a lot of investors were starting to get pretty worried about them, actually. We can see, in this overall box here, they pretty much range traded between $90 and $150 here for pretty much what we would say 2 years straight, which is kind of wild to say for Nvidia, but they're finally getting it done. They're getting up there, and they hit that $4 trillion market cap. I think the big question right now is everybody's like, okay, can this continue? Can this continue to be sustained? And I think that it personally can, at least in the ultra short term. I do think that there could be some pullbacks on the horizon, but for the next few days, I think that there could be possible continuations, kind of like what we saw on the breakout that started happening at the end of June.
Yeah, and in the worst case scenario, if it doesn't continue, then just have a tight stop and, keep the loss small. And what's nice is with a company like Nvidia, of course, its options are super liquid, as is its stock. It moves in a very asymmetrical way. So whether you're a short-term scalper or you're someone who likes to, buy and hold for a couple of days or even weeks, you can just set your stop loss at a reasonable level, which is, of course, subjective, but it also depends on how long you plan on holding the trade for. For example, if you're someone who's, scalping intraday, you might have a stop loss that is maybe 50 cents away from the current price. Whereas if you are someone who's trading the broader trend at hand, that stop loss might trail by, $4 to $5 or maybe even more. But either way, it's definitely running with a lot of momentum. Tom, are there any key levels that stand out to you? I know it's kind of hard because we're at all-time highs.
Yeah, it really is a little bit difficult here because there's just nothing overly established. I know that the level of 170 will probably be pretty huge over the next few trading days. And if we do, let's say, continue on this sustained uptrend, breaking the high of day today around 164.35 would be pretty good. And if we could break that, I think targeting 170 over the next trading day to couple trading days, maybe to around the end of this week, could be the smart thing to do. But whenever I look at Nvidia, the thing is just really identifying that intraday momentum, right? And a lot of that came right at open today. Within the first, I would say, 10 candles, right? The run was pretty much over. So be ready at market open, and it can have those huge multi-dollar moves within just a few minutes there. So be ready because the momentum could pass you up, and you have to really have a plan, I would say, ready preemptively for this one. Something that I would be worried for is if it started to pull back hard under 160, I would start to look at the trend shifting, but I doubt that happens tomorrow.
Sounds good. And then some other information to know is that they also announced that they're going to be launching like a China-specific AI chip that's modified to meet the tightened export controls from Trump. And basically, they plan to launch this new AI chip as soon as September. So that's pretty cool as well, and it's definitely helping this bull run. I know some people out there are, looking at the next potential stock to join the $4 trillion club. And right now, that's set to be Microsoft. They are currently the second heaviest weighted company in the S&P 500, and they are running at all-time highs as well. They're not as explosive or euphoric as Nvidia, but I mean, Tom, this trend has been insane lately.
It really has. I love the way that Microsoft gapped up here at the end of April, beginning of May with their earnings, and they have just been straight up ever since then, hitting $500 per share. I would argue, like, even over the past month, like, the trend has been almost better than Nvidia's, like, more straight to the upside, we would say, whereas Nvidia has, like, a few more red candles mixed in. But overall, I do like Microsoft's trend, too, and whenever I'm looking at it, it just broke above $500, which is critical for this stock. I was really skeptical that they would get past 500 today, but it was a very nice move early on, and then they even bounced off of $500 and held it really well as intraday support, as I'm showing right here on the chart. And that's just the critical thing about looking at some of these bigger psychological levels too. You can catch some of those really nice intraday bounces off of them, but love to see them above 500. And of course, Mike, as we know, I would say AI chip stocks like Nvidia have definitely been ruling the show lately. I know Microsoft might not have as much hype, but it definitely deserves to be talked about and to be up there, that's for sure.
Yep, and these two stocks have been helping to carry the market big time. So SPY actually held up pretty well today. We're still close to all-time highs, but we're definitely in a little bit of a chop zone here. Tom, when you look at SPY right now, what are the key levels that stand out to you?
I have to zoom out on a 15-minute chart, and yesterday we talked about some of these levels, and today it worked out perfectly. So 624 to 624.50 has to be talked about as a huge resistance overhead. We can see that SPY touched that this morning and ended up rejecting there pretty well. That shows that this is a large resistance. If SPY cannot break above this tomorrow, I would not get overly bullish, of course. Now, if it does break above this, we'll probably be putting pressure on the high, or the all-time high, which is actually really close, around 626. So definitely be ready for that if the SPY starts to move early on tomorrow. Personally, I'm a little bit worried about a possible rejection here. If there is rejection today, 622 and 622.50 was amazing resistance. If we can end up breaking back below this level, that's where I would start to turn a little bit more bearish, and then maybe start to even look at 620, and then also that recent low from this week around 618. That's where I would start to look for some more areas of support coming up. I know we talked about 618 a lot yesterday. Unfortunately, SPY did not get there today, but there were good intraday opportunities to the upside, and that's why it's so important to be adaptable in the short term. Those traders today, they were able to adapt and identify that 622.50 breakout. It ended up being a great morning for them.
Definitely. So good stuff there, and I will keep a close eye on all of these levels. And then, Tom, we know from yesterday, Amazon definitely had a weak initial start to Prime Day, but it looks like they're turning things around. So what's going on here?
Yeah, this morning they turned on the jets and actually made a full-blown recovery all the way back up to the levels from yesterday morning, around 224 to 224.50. But like we talked about yesterday, there was actually a 14% drop in Prime Day sales within the first 4 hours. It looks like now that picked up a little bit. As we got through the first 24 hours, there ended up being a year-over-year increase of 10%. So it looks like sales did pick up and things got a little bit better here for Amazon. Now, this isn't necessarily, I would say, too groundbreaking for them. They didn't really get all the way back up, and then also the recovery was not sustained, but it's definitely a lot better than the headlines from yesterday, I'll tell you that. So, and I also just got to say that this Prime Day is going to be 4 days long, so as we go forward over the next few trading days, if there is some more positive headlines like what we saw today, keep some of these key resistances on watch, like 224 to 224.50. We can see that there's been some serious touches and bounces there, and if those positive headlines can really get us to get some solid breakouts through here, there can be some great opportunities. So I wanted to really show you guys this before we start getting those headlines coming in a little bit. Now, there was some slight negatives today, Mike. Unfortunately, it looks like there was an Ohio ruling that is going to make data centers pay for minimum energy needs. That did end up hurting Amazon stock intraday today. We can see that it dipped down to touch the trend line right there, and that was as that news released. And then also yesterday, Jeff Bezos did sell some Amazon shares too.
That's a scary number to sell, Tom. 666 million. But yeah, I mean, the stock is definitely moving quite a bit in the short term. It's certainly in play, so definitely keep it close on watch. If you're someone who likes the Prime Day prospects, and maybe Amazon can be like a potential like short-term bullish play over the next few trading days, maybe into early next week. Personally, when I look at Amazon right now, I think it would be great if the stock can get back above that like 223.70 area and maybe get closer to pressuring like that 225 resistance level. I think that could make for like a nice like breakout style trade. But again, the stock has some work to do if it wants to do that. So we'll see what happens. But either way, keep it close on watch. The earnings and the schedule is all clear for tomorrow, so we don't have anything to worry about there. So let's jump right into some setups and predictions then. A stock that is close on watch is ETHA to the upside. This follows Ethereum, and we actually saw some great moves out of crypto prices today. Bitcoin hit highs of $112,000 per coin, which is great to see. Ethereum also had a pretty solid day as it popped up by just under 5%, trading just under $2,800. ETHA follows Ethereum, of course, and it's also a trade that we saw a recent big money play on, which is good to see. That trade is, certainly looking better and better with this recent price action. The trader here is still holding, and this stock is definitely on my bullish radar, especially with this recent, acceleration.
Yeah, that was a pretty crazy big money trade, being $27 million. They did exit some. They're still holding $6 million of that position, and ETHA is starting to look very nice here as it's extending up. And I've seen this setup play out a lot where we will say a stock gets really bullish, and then we have this period of flatness or consolidation before you finally get a better uptrend or broader uptrend starting to come into play. I definitely like the prospect of that with ETHA, and I'm definitely still watching it with that big money trade. So pretty fire to see this and Ethereum both starting to move here in the short term. With my first setup, I'm looking at Enphase to the upside. Enphase has been in a pretty weird setup over the past few months. We can see that it's been in an overall downtrend, and there's been these weird periods on Enphase where it will uptrend for a few weeks and then have these like weird gap downs, right? And it's actually at the point right now where we would say if the trend were to continue down, it would start gapping down again. But with today's candle, I actually do like the prospect of a potential breakout here. And there's a pretty solid resistance to watch for this breakout at $44. We can see that this resistance at 44 has been pretty huge over the past couple weeks, and this stock has rejected multiple times very close to here. So I'm going to be watching it over the next few trading days, and if it can get a $44 breakout, potentially look at some upside movement. It even moved up 4% today, bouncing off the recent $40 to $39 support. So I thought that was pretty fire as well. But these I would say clean energy stocks like Enphase, they have been getting some, I would say, better price action in the short term. And, looking at a potential breakout could be in the cards, as shorts might even be covering here, considering how low it's starting to get.
Seriously, and when you look at like a 5 or 15-minute chart intraday, there is some serious buying going on here. Like ever since the market opened, like the stock not only moved up in a meaningful way, but it was just crazy consistent. So like clearly there is some significant buying going on here. So we'll keep it close on watch. But another ticker that is definitely on the radar is Intel, and it is to the upside. I know I mentioned this one yesterday. It didn't really do too much today, but it just kind of traded like flat more than anything else. Again, the new CEO is trying to turn things around here. It's holding this like $18 to $20 support area in a great way. I like how it's holding its current price point, and what I like more than anything else is the risk reward. Right now, Intel is trading for around like $23.44. If you just round up and let's say call it $23.50, if you set a stop loss at 23.20, that'd be like 30 cents in risk. And I really wouldn't be surprised to see it get above $24 soon if it can maintain this, short-term uptrend that it's in. In that case, that would be over 50 cents in reward. But again, I think it could get like much greater than that if we can see like a continuation of this uptrend.
Yeah, I really do like this uptrend overall here. I like how it held intraday support around like 23.15 as well today. I'll definitely be keeping it on the radar for a possible short-term continuation. I definitely like the overall and broader uptrend that it's in here. Even though it wasn't green today, it still is on the radar in my book. With my next setup, I'm looking at Microsoft, and with this one, we are looking at the Bookmap. Microsoft is actually trying to hold a key $500 support today. We can see it actually have a pretty perfect bounce off of this level. I know that we talked about Microsoft a little bit earlier, but looking at them on the Bookmap here, we can see that 500 had a little bit of buyers coming in at intraday today. Now, it's been trading around $500 for a little while, so whenever you see just a little bit of buyers here, realize that they've been getting wiped out recently. So it's really good, though, to see the X-ray vision and to see them come in there. If you were watching Bookmap today and you were watching Microsoft fall, that could have been an area where maybe you bought it back to the upside for a potential day trade. Nonetheless, the buyers restack there after the fact, so I'm definitely going to be watching $500 as some key support. And I noticed that there was actually a very key resistance today around 505, and the sellers also restacked up right there. So I'll be watching for 505. There was a lot of sellers stacked up around 510 as well, so you can watch that for a potential target if we do get that 505 breakout. But that's kind of how I like to look at the Bookmap. You can look at these supports and resistances as possible areas, like let's say for targets and even for possible breakout ranges. So shout out to Bookmap for the X-ray vision. Make sure you check out the deals in the links down below.
They're about to go away, so now's your chance. And I think it was especially useful right at that $500 level today with Microsoft. There was clearly a buy wall there. The stock bounced beautifully off of it. And then like you pointed out, the, significant sell walls overhead as well for like forward levels of, resistance. Very useful. So we'll keep a close eye on all of these levels for Microsoft. But besides that, Tom, let's jump right into today's momentum plays. And with the first one, we have Coinbase, ticker symbol COIN, to the upside.
Coinbase had quite the move today, 5.36% as crypto exploded. If Coinbase can break above 374, then watch it to the upside.
All right, with the next one, we have Bloom Energy, ticker symbol BE, also to the upside.
If Bloom can break out above 29.30, then watch them up pretty much right at the high of day there.
And then with the last one, we have Big Bear AI, ticker symbol BBAI, to the downside.
Poor Big Bear actually sold off a little today. I love watching this one up, but with everything that rises, they will fall eventually. If they break under $6.96, watch them down. They're close to the $7 support.
Sounds good. So we have these three stocks on the radar for potential continuations tomorrow, if and only if they break through at the levels listed. Setups come and go, but prioritize making smart trading decisions. Have stop losses to protect yourself. Know why you are trading what you're trading. And in the worst case scenario, if a trade is working against you, err on the side of cutting to keep the loss small so your next winner can outweigh it, at least in an easier way. So keep that in mind. Let's trade smart. Let's trade disciplined. And then besides that, Tom, let's jump right into today's $451,000 big money trade. And we are looking at ticker symbol DECK, Deckers Outdoor. So this is actually the second recent big money trade we've had with this one. The original one did very well, but with this one, the trader bought the 105 strike call options that expire on August 15th of 2025. This is a pretty short-term trade. It expires in a little bit over a month. The strike price is right at the money, and the stock is currently in a situation where it is bouncing off of a significant support, especially at $100. And this is one of this company's largest stock drawdowns that it has ever had. It's currently right there with the COVID drawdown. But either way, looking at this stock, it's holding support in a good way. It didn't really move too much today, but I certainly like how these call options are at the money and the expiration soon, because that means the trader here is expecting a move pretty quickly.
Yeah, the expiration's just a little bit over 1 month away. It's the 105 strikes, which are pretty much right at the money. I would not think that they were shorting this, especially considering how close this stock is to support. There's actually a really big gap to fill on this stock, up to around like $122.50. I'm not saying that it's going to get up to and even all the way up to the top of the gap, but I could see it getting into the gap zone at least, like above $112, and that would definitely put these calls in a pretty good spot here. But nonetheless, you're right. This stock has been in quite the drawdown, Mike, but it's been trying to form a base here on the daily chart. It almost reminds me of something like, let's just say Intel. You know, like you zoom out on Intel, it continues to bounce off support multiple times. DECK, I know it's not the exact same setup, but it's very similar, and it's so low right now that it just makes for a really good like risk reward, right? I know that, you know, this is obviously a big money play, so maybe try to follow the big money as best as you can, but if you stop out below some of these recent lows and, you know, you target, let's just say, the upper end of that gap fill, the risk reward could be really good depending on where you put it, and if you use $100, it gets even better there.
Definitely. So keep a close eye on it. Should be interesting. And if you're new to the channel, welcome, and definitely consider obliterating that subscribe button so you can get our videos recommended to you more often. We post all the time covering daily big money trades, SPY levels and analysis, the most important news, information, earnings, and economic events, and basically everything else you need to know about the stock market every single day. Again, if you subscribe, you'll get our videos recommended to you more often. But before we continue on, we have to give a giant shout out to today's member of the day, JXWA in the StockedUp Discord. He had a great post today showing some awesome profits and around $235 in profits and just under 36% in gains. So huge shout out to you. Keep up the great work going forward. This is awesome to see. And then last but not least, as we've been saying, the Bookmap sweet deal is about to end. It's a 4th of July sale. This is the lowest price I've ever seen from Bookmap. They are super useful, and it is the X-ray vision of the stock market. You can see all of the important big levels to pay attention to where large buy and sell walls are stacked up. And you can save more using the link down below than even on like Bookmap's main website. So definitely check it out. It is awesome. We love you guys, Bookmap. And besides that, thank you all so much for watching, and let's crush it in the market tomorrow.